Hey guys, just another video just to wrap up the week, and what is ahead for next week. So I'll only cover just a few instruments. It was relatively quiet considering the Fed rate rise. I guess there was a lot of action on Thursday and Friday, but overall I think it wasn't as eventful as I thought it might be. So just to start off, I'll talk about the S&P 500, the stock index, right? So I'm going to just kind of change up the order a little bit because I'll just start from the most important to and go down from there. So on Fridays, so as of yesterday, we had a big sell-off, right? Last 2 days have been a big sell-off. What I'll show you what's kind of happening. So So prices put in these two tops, right, recently, the last few weeks. Now, last night, or since the Fed rate, so when the Fed raised the rate, we had a lot of choppiness, which is basically whipsawing, where the prices just go up, down, up, down, up, down, in large moves very quickly. But overall, for the day, it ended up down, okay? Same thing yesterday. We had a lot of choppiness inside, and I'll show you what happened within this candle. But the most important thing, what I probably want to take notice of, is the fact that we closed, right? We closed the week lower, right? We also closed below the previous lower low. Okay, so that's important. That usually signals continuation of the trend. Okay, so I'd expect to see lower prices next week. Probably another day or two, maybe, of lower prices before we might see some kind of reversal. But yeah, I think heading into January and February, I think there's going to be a lot more downside to come. And I'll kind of explain to you what I'm looking at. Okay, so you can understand these candles are actually really important, right? This is telling you something. So if you ever do learn how to read candlesticks. It can be it can help you a lot in terms of identifying where you want to enter into the market, where the support is, where the resistance is, because all these little things, all these little features here matter. So it's important to take note of them. So to me, this is a very bearish candle. You've got this wick up here, and you've got this big down move. So a lot of the selling happened towards the end of the day. So what I'll do is I'll just drill into the 4 hour, and I've just marked the lines here. So these two blue lines what I marked for the daily. So the daily high here, I marked the blue line, and then I did the daily low for yesterday. So if I mark it to the 4 hour, so I've got those two lines there. So it's basically saying that the day started about probably here, I think, or here. So 4, 8, 10, 12, 16, 24. Okay, so the day started here. So this is on Thursday's candle, right? So we opened up lower, right? And there was a lot of choppiness in between. So we had a lot of big moves down, and we went back up, and then went back down again. So it's quite a big move, and then it's gone back up again. And then towards probably the last session, which is the New York session, there was a lot of selling pressure down. So a lot of people, you can get caught in these little whipsaws a lot. You got to be careful, because I've been caught in this before too. It's not pretty, because this is where psychology and emotions take over. And once you let emotions take over, it can be very destructive, because you're going through this constant cycle of ups and downs, ups and downs that it could, I don't know any trader that hasn't been through this before and, come out losing, because it's very dangerous to trade in these kind of environments, right? But yeah, you can see this is what I'm looking at here. There was a lot of selling pressure towards the end of the day, okay? What you've got to note is the last hour of the trading is probably the most important, right? A lot of the action usually takes... A lot of the big moves usually happen at the start or the end of the session. All right. So for Australia, for example, you would have the ASX, and all the action would happen really between 10 to 11, and then towards the end of the day, or just after lunch, right? And then same thing with London session, or there'll be between 6 o'clock to 8 o'clock. That's where you get very high liquidity. A lot of the traders are in around that time, and then after that it gets pretty quiet, and then up until the New York session opens, which crosses over into the London session too. Which London kind of crosses into New York's open, so there's a lot of money that comes in around that time. So yeah, but I'll give you an idea. But yeah, so the next level I'm eyeing is that 1966 area. That's probably the level I'm looking at, maybe give or take. But what I'll do is I'll just show you these pivot points. But it's important to know that we've violated these key pivot levels. So 2003 has been violated, and 2021 has been violated as well. So we've broken through pretty key areas of support and resistance, right? Now, the next level I'd expect us to touch is probably, we'll touch 1998 easily. We'll touch that on Monday, but for sure, definitely. But I do see probably another day of downside before we see a reversal. Now, how are we going to know it's going to reverse, right? Basically, you want to see a single day, right, for a daily close, a bullish candle on a daily close, right? So something similar to this one, right, like a candle like that. This is following a big negative day, or the big negative candle, basically, right? Same here, you got this big candle down, and then you've got this. The next candle that came up was pretty much kind of a indecision candle or reversal candle, and you would use other, techniques to kind of verify that. You wouldn't just look at the candle and just go, okay, well, I'll buy up, You'd use things like, say for instance, RSI. This indicator here is called an RSI. I'm not big with indicators. I try to stay away from indicators because usually the indicators that are available to use are usually lagging indicators. So, the data that comes in, the information you're getting is actually lagging. So it's not up to where you need to be. That's why I'm not a big fan of these indicators. But I do use the RSI because I reckon it's useful. But you can see here we're kind of in oversold territory already, right? So that's usually already a signal for me that we could see a reversal soon. But whenever it's in oversold or overbought or wherever it is, it doesn't mean that it's a signal to go the opposite, right? Because it can stay in the oversold area for a long time, right? So even if price keeps going up, it can still stay at that level for a long time. So you got to be mindful of that. A lot of people just buy and sell based on the RSI, but that's not the way to use the RSI. Okay. Now, apart from that, there's not much on the RSI that shows me other than the overbought and oversold levels at the moment. Okay. There is divergence, but that's just regular divergence. So nothing special there. Yeah, definitely I would see a price to go around down here. Now, I was talking to one of my friends before, and he kind of brought me onto the subject of process to trading. What is the process, right? What steps do you follow, kind of thing. So at the end of the video, I'll kind of explain to you what steps I kind of follow, right? Because process is more important than outcome, right? And I haven't really talked about that much, which I should, and I'll do that at the end of the video, okay? But yeah, I reckon there will be more downside heading into next year. Definitely, it'll be. It's going to be the first 3 months of next year is going to be very testing, all right? And I'm afraid that we might see some very large moves to the downside coming soon. So yeah, that kind of leads me on to the Aussie ASX 200. We've been very bearish for a while, like we all know that. But we came up here and then we put in this lower high. So that was already telling me that there might be something going on here. And then we broke structure, and we we formed the U lower low, right? So that already tells me that we're in a potential bearish. The trend is potentially moving into bearish territory. So what I expect next is for price to go up and probably test one of these levels here before rolling over to reverse back down, right? But as you can see from Friday's price action, you can see that we've really put in an indecision candle, right? Now, whenever you see candles like these, it's basically telling you that there's bulls and bears, and they're not sure what to do. Basically, there's a bit of a tug of war. They don't know if they want to buy up or buy down or sell down. So that's where people are at the moment. So I can understand that. But if we do roll over, if the market does move up, then this would be the level I'd be watching, right? This 5,200 area. Now, I don't think we'll get that high, but I'm just saying that if it does, that's some area you might want to look at. The other area is the 5148, which I think we've just touched, right? We've just touched it. Actually, we rolled over as well. So what I'm looking at here is more downside, basically. That's my opinion. I think we're going to see maybe a little bit more upside before we roll over back down, right? So just keep mindful of that. And this is an important level. This level here, 47563. That's a kind of in a way a historical low, right? We've already broken these lows already, right? So that's already telling me that the market wants to move down. Now, if we go below this level, 4763, then we would be expecting more downside. Definitely, I'd be looking at these levels here to find the next potential low. Okay. Now you can use techniques like Fibonacci ratio numbers, or you can use simple harmonic patterns like the ABCD pattern. So we can say price action potentially going down to the 4196 area, which is possible, right? Because when I look left, there's a lot of structure here. A lot of price action did really test these areas previously. So that's just one. That's just several techniques you can use. So yeah, just get ready for. We could see a big move down soon. So just be wary of that. Okay, cool. So that's the AUS and SPX. Now gold. Gold has been. You've got to be really careful of trading gold. Gold is really playing tricks with everyone at the moment. When you think that your pattern or your setup has failed or didn't work or got violated, gold will just turn around and then prove that you were right, basically. So got to be careful. So I've been saying that I anticipate another move down, right? Move down to the 950s, whatever, low 1000s, whatever it might be, before we actually see the real move back up. Now, since gold's moved back down, right? We've put in this double bottom now, right? Which is usually a reversal signal. If I go to the 4 hour, we've also got an advanced pattern that I have been looking for, but I did not expect it to get hit. Right, so unfortunately I didn't have an order there, right? Stupid me. And this is one of the things I need to get better at, right? As part of before going into 2016 is I just need to be able to put these orders in, keep track of these kind of trades and put my orders in there, and then that way get filled in. Sometimes you will lose, which is fine, but most of the time I've been right. I've been on the right side of the market, but I just haven't had the order in there. So I'm disappointed because I could have made a fair bit from this move, right? Now, the reason why there's been a lot of people have been getting whipsawed in and out of gold, so it's really been playing tricks with everyone at the moment. And so you can see here where we expected some kind of a reversal, right, from this down move, right, and market's gone back up. But as you can see here, as it starts up, everyone gets excited, and then bam, it pulls back down again. Okay. Then it does the same thing again, and then it pulls back down again. So it's you can look at this and say, well, it's just retracing, right? But given the volatility in gold lately, no one knows for sure which direction it looks to go. I've always maintained that we're going to see higher prices in 2016, which we will definitely. But you can see here we've kind of put in this ascending. This is a clear breakout channel. This is a clear breakout pattern. I wasn't looking at this on the 15-minute, but if you look at it carefully, you can see this is a clear accumulation, building the energy, right? And then the pullback, and then zoom, up we go. We're putting in a consolidation pattern here, so kind of like a bearish, a bullish wedge pattern. So I expect Monday we'll see another move up. How high the move is, I don't know. Okay, but worth noting, we'll be testing this line for sure, this trend line. And the first target I'd be looking at, is probably this level here, right? The 172s, 71 area. If we can get as high as about 178 or 180s, then that would be good. Yeah, this is going to be interesting to see what gold does. If gold does break these levels, if gold does break the 1078 level, then we're looking at a potential trend change, potentially. Okay, still too early to tell though, because if you look at the daily chart, you've got, these structure levels here that are very critical. All right, if we do get, it's going to require a big move to get to the 1191 area. All right, that's something to keep note of, because gold's going to be 2016 will be the year for gold. Okay, oil has been oil's just keeps going down. Right. I've marked it a line on the weekly chart. So this is on the weekly chart. We've got a low of 27.2. I think we might get there, right? Now, price just respects these levels, right? It respects structure so much. So every time, I've actually been calling oil really well. It's just I haven't traded oil at all. There's too many markets to trade. I couldn't trace all the markets, so I didn't trade it. But I reckon there's a good chance we might see it go as low as 27. Now, if we get lower than that, we're in trouble, big trouble. All right, we're talking about complete market chaos if it goes below that. It's already chaos already. So keep an eye on that. But what you'll want to see is what I've noticed is there is some divergence, right? So there's some bullish divergence. So you've got RSI making higher lows, right? The chart price action making lower lows. Usually that means that there's energy being stored, right? Being built for a big move up. Okay, a reversal. Now, how high the reversal will be, I don't know. Okay, but just keep in mind that at some stage, right, soon, I'd expect a reversal. Now, it could be if we go as low as 27, we could see it. I don't know. We have to wait and see. But no trades, right? You don't want to get caught in the oil trade. What I usually do is I trade the USD CAD, which is inversely correlated to the oil market. So whenever oil is up, USD CAD is down. Whenever CAD is up, USD is down. Did I say that right? Yep. So up and down basically. So, but you can see here if you were involved in this trade from the beginning, it's a big move, big move. Yeah. So I reckon we'll see higher prices in USD CAD. But once this reverses, and that's why I said just keep an eye on oil. If oil reverses to the upside, then USD CAD will reverse as well. You could be looking at a very big trade down. Okay, so something to watch. USD CAD. What else is there? Okay. AUD USD. I won't really go through the currencies too much. I'll just go through Aussie dollar quickly. Really not much happening on the currency markets. Nothing exciting anyway that I've seen. But so this cipher pattern that I drew in on for the last, you've probably seen the last two videos. We've just been waiting for it to come down, right? To fill. taken 2 weeks of this pattern to play out, and it finally played out, and we got into the trade, and we got target 1 hit. Okay, so notice how it's literally the pattern completed right on the dot. Right, it's always like that. You know, it's just price. Just it's not random. It's not random, guys. It's not a fluke. You know, it happens quite a lot. You know, where price action just touches and respects that particular level. Now, how I draw those levels might be a little bit off. You know, but you know, it always just respects certain numbers. I don't know why. It just is. So we're looking for target 1s, which I think we've got. No, we're not yet, not quite there yet, but close, right? Now, what I want you to take note of is, now I've been putting in this level, this 74, 75 level, right? That I've been saying that we could possibly go up to. Now that seems less likely now, right? Due to this move over the last few days. Now, I wouldn't rule it out completely yet. Right, but I'm just saying that if it does happen to go back to that level, you know you've got a buy signal, right? But it looks like we might see a move back up here, and then potentially we might see price rolling over. Okay. Now, if this falls, we could be looking at a big fall. Okay. Now, I'll show you why. Because markets go through cycles, right? They go through their standard cycles. How well? Take pivots off. Okay. I'll just start from here. Okay, so markets tend to go through these cycles, and I won't talk about how to calculate these cycles because it gets into a long conversation about it. But you can see here, right? Like you've got price action, you know. Following a big move, right? It usually consolidates, right? It consolidates within a channel, right? Let's just call this a channel here, right? And this is a daily chart, so you know, it trades within its channel, and then at some stage it gets ready for a big move, right? It does an initial move, right? The market does an initial move, which is kind of like this one here. And that's where it's kind of like signaling to me that there's a bigger move coming up soon. And then, you know, the market recovers, you know, it goes through its little thing, and then at some stage it rolls over again, okay? Same thing with here, a smaller one here, right? But this one's considered a bigger move, right? So then you got another one here, right? Now you can never predict exactly how long the cycles will go for. You can, but you know you're better off not trying, because yeah, you'll be spending too much time on it. So, but what I'm seeing here is also another kind of potential move back down, right? So I look at this as being one big range basically, right? So I look at this as being the initial, you know, price action, and then we had this initial big move, right, down, back to the 69 area. Then we pulled back up, consolidated a bit, went back up, slowly recovered our losses, and the market's getting ready for another move, right? Whether it's up or down, I don't know. But I'm telling you now that from what I can see, it looks like it's going to be a big down move, okay? Basically, price is making lower highs, right? We're kind of forming this wedge pattern, right? Whenever we see these wedge patterns, right? And I'll show you on the higher time frame. This is stock standard technical analysis as well, so it's not like I'm making this up. You know, whenever we see price go like this, right, so we've kind of got this mini little wedge pattern there. Yep, back down. Price has gone down. Yep, back down, and then same thing here, right? Doing the same thing. The move is usually equal to this move, okay? So the move down would be equal to the original move from up here, okay? I won't draw the exact numbers, but got the idea. So based on that, we're looking at a potential move down to the low 60s, right? I've been saying this for quite a while, and I just go off what the chart tells me, guys. All right? If the technicals tell me this, then that's all I go with. That's all I got. You know, I'm never, most of the time I've been right, but you know, we can never be 100% sure. We just basically trade off the numbers. Right? So I'll leave it there, but just get ready for a potential move down. And so if you've got money exchanged or anything like that, or you're looking at exchanging money for holiday, better to do that soon. I think we'll see some lows pretty soon. How long we stay down there for, I don't know. But I think the Aussie dollar will start to see some more upside probably after Q1, first quarter, 2016. But again, still too early to tell. It's just a thought. That's all it is. So what I'll do now is I've got nothing else to cover that's important. So what I'll do is I'll kind of talk to you about the process of this, right? So just give me 1 second. So I thought I'd just kind of show you what's the process I run through each time I look at a stock or a currency or whatever the case might be, right? I use the same process, right? So I haven't explained it much before, which I should have, but I'll do it now quickly. So I just run through basically. Some people do it different. Some people just have a normal checklist, like which is some check boxes to check off what they need to check. That's simple. Everyone does it differently, right? The point is you want to make it so that it's just simple, that a set of steps that you can just repeat over and over again, because what you're trying to achieve is consistency, right? You don't want to be one of those ones where you know for this one you'll try this. These are the steps, and then for that one you'll do these steps, or you come in day out and you're just changing it all the time. That's not the right way of doing it. You want to just set up a process where it's repeatable, right, every day, because this is all about process, right? It's not exactly about the outcome. If you get the process right, you're consistent, and it's back tested and it's proven to work, then over time, you know, the outcome won't matter. It will just go your way all the time, right? Most of the time. So just getting the process is important, because you want to make sure you do all your, everything you check is defined in here, right? So, and this is a process I use, which is called IPDE, which is identify, predict, decide, and execute. Identify and predict are the most important, all right? And I'll kind of talk about that now. So, in my trading plan here, and this is something I haven't talked about before too, is about writing a trading plan. But in my trading plan, I'll have what am I looking for? I'll go through. I'll actually list it out in detail. What am I looking for when I go through this phase? Identify. The point is you want to try and make it as easy as possible. You don't want to put too much stuff in there, which I think I have. I'm going to have to fix this. And you can just go in there every day and just repeat the same process over and over and over again, right? So I'll kind of run you down roughly how it works, right? So let's just say I was looking at a stock, or in this case, let's say we're looking at Australian dollar. Starting from the higher time frame, say from the weekly or the daily down to your lower time frame, however you want to work it, I'll identify what the market is doing. That's the first thing. What is the market doing, right? So, what is the market doing? Simple, right? And then you can kind of expand that to say, well, you have a list of smaller sub questions like, is the market trending? Is it bullish or bearish? Right? Is it in consolidation? Right? Where are the key structure levels? Right? So I'd say, for this example, well, what is the market doing? Well, the market is doing lower highs, lower lows, so it's clearly in a bearish trend. Okay, but we're putting in this consolidation pattern where price is trading within this wedge, this channel. Right? So that's what I would say. I'd say the market is bearish, but we're at a level of consolidation where we put in a bearish wedge pattern, right? So that's the first thing. That's identifying what the market is doing. Then I'd say, well, we've got some key structure levels around this level here, right? Because price has previously gone down to test this level several times. So we've got a key structure level there. and with the structure low and the structure highs of this move would be, this price here and that price there. Those are the sorts of questions you ask. You don't have to. It doesn't have to be that. It could be anything else, whatever works for you, right? So really, is the first thing is what is the market doing, all right? And then you would say the next question would be the predict phase, basically. So where is the market at the current level? Where is the market likely to go? Simple. Because this is going to tell you whether you're going to look for long or short trades, right? You can't just enter a short position if the market is clearly, trending is clearly bullish, right? It just doesn't make sense, okay? So here you would say at the current level, which is here, where is the market likely to go? Now, and you have to do this from the daily and then go down to the lower time frames, and then you'll kind of come to a conclusion, okay? But let's just say I'm just working on one time frame, which is the daily, okay? So I'd say that from here, I'd be looking at this and going, well, based on this, price action is likely to go up or down. That's the question I asked. In this example here, it's a little bit more tricky because you're kind of in this wedge pattern. But let's just say you decided the market is likely to go up, right? Okay, so if the market is likely to go up, right, where is it likely to go to, right? So where is the market likely to go? Okay, so I'm looking at this, I would say, based on my knowledge of blah, 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 there is a high likely chance that price action will go up to here to test this level of structure, okay? Now, you don't want to, you've got to be realistic about these things. You can't just say, well, if we enter here, there's a good chance that price will go up here, right? Which it can. I'm not saying it can't go up there, but I'm just saying, just be realistic, because as it goes up, it just won't go up in a straight line, right? It's got to go up and test levels, right? It's got to test structure levels, retrace, pull back, profit taking, go up. Then you've got this major structure level here that's going to have to test, right? Which could take a long time. It could take forever for it to even get through that. Those are the sorts of questions you've got to ask. You can't just say, oh yeah, I want to sell up here. Because that could take you months or years before you actually hit that level, right? Or if you hit it at all. So you've got to be realistic and say, you're really looking at the next realistic target level, which in this case is this level here. So I say, if I entered here to be long, then the next level it is likely to go to is here, right? Now, then you've got to ask yourself, well, if it goes against me, how far is it likely to go down? Where is price likely to stall, right? If the trade reverses on me, right? And I would say, based on my knowledge of blah blah blah, this is probably like the likely area that price will fall down to before it might look to rebound or continue down, right? Based off that, you can determine your risk to reward, right? Your risk to reward for this trade would be, that's how much you are potentially risking, right? Because you're saying that if it goes down, then there's a high likelihood that it will go down to this level here, right? So that's your risk, and your potential reward is this. Right? Now that's saying that, yeah, so this gives you a one-to-one risk reward, a bit over a one-to-one risk reward. So that's okay. You don't want to be entering trades where you're risking more than your reward. That's the key thing. So that's the next question I have there, which is, what is the risk to reward? That's very important that you know that. Right? So far, what is the market doing? And at the current level, where is the market likely to go? Right? And this could be a combination of fundamentals or technicals, based on technicals or fundamentals. It's up to you. What depends on what kind of trader you are. And then, what is the risk to reward of the trade? Is it 1-to-1 or is it 1-to-3? Whatever it might be. Okay. So that's your predict phase. So you're predicting that price will likely to go up to this level, and if it goes down, then it's likely to go to this level. Now, the decide bit is more around, deciding whether you're going to enter the trade or not. Because sometimes you might see a setup, but it might take about 2 weeks or 3 weeks before it actually forms, right? or if it happens, it might be, you need to enter the trade straight away. So the decide area is really just to say, okay, well, based on, if it's 2 weeks down the track, then you can look at this, go through the same process again, and say, well, is the trade still valid? Is it still a valid entry, right? If it is, then you can proceed to the next step, which is execute, right? So decide is really just deciding if the trade is viable. Is there other economic news? Is there any other fundamental news going on around the world that could affect this particular trade? Is there key data that's going to be released by Australia in the next coming days that could influence this price movement, right? You got to think about these things, right? You got to, even though there's this is all kind of technical analysis. You need to know what the fundamentals are too. You need to know what is coming up that could push the price, that could influence the price to go up or down, right? So those are sorts of things you got to look at. And then execute is simple, which is just entering the trade, right? Now you can go a bit more in more detail, right, and go, well, I will only execute the trade if price action does certain things, right? And when I say certain things, I mean I want to see a reversal pattern, right? I'm not just going to enter the trade if it hits a particular price level, right? I want to see a particular candlestick pattern that shows me that the trend has reversed, right? Or I want to see, whatever the case might be, right? So that's executing, right? I think I've kind of covered off it the best possible way I can. If you want to know more about this, then I can show you next time. But it's really just a process, guys. It's all the technical analysis is the easy part. Honestly, it's the easy part because it's just rules, right? It's just set rules that you follow. Whereas the process is something that you have to kind of develop yourself, right? Now you got to think about it carefully because if you develop a process where you've got 50 million things you got to check, is that feasible, right? If you're day trading and you're trading like 10 pairs or 12 pairs or 15 pairs, are you going to be doing that every day? Are you going to actually be doing the same process all the time? Because this only works if you do it all the time, okay? So some people might have to cut down, right? You might have to cut down on the number of pairs you're watching. So instead of watching 10, you might have to cut down to, say, 2. And then make sure that you follow this process all the time. There's no point doing the same process for one and not doing the same for the other one. It just doesn't work like that. You have to be consistent. It's all about consistency. Because what you'll find is that, if you start changing things up, just say you had like 10 steps here and all of a sudden, 2 didn't work for whatever reason and you decide to change. Now, if you've only just started with setting up a process and you're constantly changing in between, then you're doomed to fail because you're not being consistent, right? The whole point is to be consistent because what happens is you will have days or weeks where you're profitable. You're just constantly, nothing can go wrong. You're just constantly up, right? It's like nothing. The world is not, it's like God is on your side. But at some point during the year, you will find that you will be doing the exact same thing like you did before, but the market is completely going against you. No one knows why. It's just the way it is, right? Nothing goes up forever, right? It's got to go down. And that's where people get caught out because once they start to notice that they're like, oh, well, maybe it's me. Maybe it's something wrong with my process. Maybe it's something wrong with my strategy or whatever the case might be. And that's why I'm losing. So therefore, I need to change it. I need to fix it, right? But people don't realize it. It's just the market. It's just the way the market is. It's whatever the case might be. It's just the way it is. So you just keep trading the same system because at some point that's going to reverse, right? That's going to reverse, and then things will start to work out again. And that's why I talk about risk to reward because you need to during those periods where you're down, where everything goes against you. The best thing you can do is manage risk, right? So you're losing trades. You want your losing trades to be minimal, right? But yet you want the winning trades to be high. That's the best you can do because at some stage the market will go back into your favor and then you will be profitable again. But if you keep changing shit up like this, then by the time you get to that level where you could have been profitable, you might actually be in a losing position again. So it's not a clean. That's why I believe in this process. Keep it simple. If you're trading, if you're one of those swing traders where you've got another job and you just only want to trade once a day, as in like only want to enter like 1 or 2 trades a day and then leave it there till the next day to check on, then this is perfect. You just have to just set up maybe a few pointers, a few questions, just a small checklist, and just do that every day, day in, day out. But back test it first, okay? So set up the process, then go through the pairs that you want to trade, right, consistently, and then back test it, see if it actually works, right? So go through all the way down to 1970 if you have to, right? You want to try and get as much data as you can to see if it actually worked. So let's just say if you were to back test this, right? Here. Go through your IPD, just say the price was here. Price action was about here. You'd say, go through the process, identify what is the market doing. Well, the market's clearly, choppy, whipsaw. It's in some sort of consolidation, but it's not, okay. Is it bullish or bearish? Well, you can't tell. It's just in consolidation. Okay, at the point of entry, where is the market likely to go? Well, based on that, if you only saw this, then you would say to yourself, well, if you don't know if you can't predict what price action is going to do, like comfortably, then that's not a trade. There's no trading there. You should only enter the trade if you're confident, price action will go a certain way, right? So at the moment, I'd be looking at this going, well, I don't really know. Basically, I think it might go down. I don't know. But that's the best you can do, right? But yeah, just back test it, see if it works. You should be fine. So that's called the IPDE, right? I've got some information on that. If you want me, I can send it to you. It goes through a bit more in more detail. But there's also another system that I trade, which is called CTS. This is a very good system that I trade only for the higher time frame type stuff. Combined technical scoring system, which is basically the IPDE but expanded in more detail, right? And that's where actually I've got it here. Actually, hold on. IPDE search. Hold on, let me just go find it. Sorry. There we go, IPDE. Alright, so it's combined technical scoring system. So basically all it is just a set of criteria that I check for, right? So after doing my IPDE, right, or during my IPDE, I'll check for all these things, right? RSI overbought, oversold, minor structure, major structure, ratio confirmation, ABCD completion, all that kind of stuff, right? Where I've got a scoring system, right? So each one I'll have a value, say 1 point, 2 point, 3 point, whatever the case may be. I also have a priority level, right? So I'd say that for the trade to be, the trade the trade must have this signal, RSI signal. It must have ratio confirmation. It must have test of structure. And the other ones I would say, this is a would like to have high time frame confirmation. Would like to have an advanced pattern. Should have is like, it should have this ABCD pattern, but I don't necessarily need it to look at it. But basically I come up with a score, right? If I get a score, say my minimum score required is 7, right? Which also includes the ones that are mandatory. Must have, right? So if I get all that, and then my total score is 7 or above, then I enter the trade. Always, right? It doesn't matter, I always enter the trade. And yeah, that's my CTS system there. So it's very easy, very simple. And that's it. So I hope that helps. Let me know if you have any questions, guys. But yeah, just keep an eye on the next week, last week of before Christmas break. And heading into next year, I think we're going to see some big volatility. So just be mindful of that. I wouldn't be buying any stocks to go long. Okay, don't try and find the bottom. because there's no point, okay? Because when this market crashes, it's going to crash like 50% or 40% or 90%. You don't know. You can't try and be picking bottoms, okay? Best of luck. I'll speak to you soon.